This is Ayodeji Ebo 2.0 for you here this morning around the marketplace. We talk about the falling yields on Nigeria's treasury bills and Naira bonds, and you heard the Eurobond market's been relatively quiet, at least for now, with those billions we had out there. But let's bring it back and beyond the fixed income. Ayodeji, thank you very much for sticking around here. The last question was more about what foreign investors are thinking. I'm interested. The charity begins at home. So what are local investors thinking right now? Yeah. Are they getting scared of the entire political noise getting louder on a daily basis, or they're worried about whether it is headsmen, whatever it is, the killings? Nigeria is what I call the killing fields.
Yeah, interesting. The domestic investors too are also exhibiting that concern in terms of the political concern. But some of them are just trying to rebalance, restructure their portfolio, exit from the equities market, and try to place some fund within the fixed income market. Trying to approach, pending the end of the year, we expect that maybe if prices go down, prices become very attractive, they will be able to see some opportunities, especially within the equities market. So trying to position that as we approach elections, foreign investors will reduce their own position. As a result, prices would decline, and gives them opportunity. For them, they have more idea in terms of how politics is played within the local environment. They have more understanding about that.
Like you're doing a home play on your own field, in your own stadium, in an EPL. Isn't it?
Exactly.
What you call home advantage.
Home advantage. They understand that whether it's the incumbent that remains in power or there's a change in policy, Nigeria would still remain as a country, and they will just flow with whatever government that will be in place. So that they are trying to also identify opportunities before then. But we standing within the equity space, we expect that for companies, based on their results, will also try to shape the investor sentiment within the market.
Are folks right now looking at the election as another corner curve in our history or in our calendar that they want to make some money very quickly before the politicians jump into the arena and the money may not really be flowing towards Broad Street?
Yeah, it's we may say may not necessarily be flowing towards Broad Street, but you also expect as you approach election, there's more liquidity within the system. So depending
we understand, and I'm going to cut in respectfully. We know that most of the political monies during elections don't go into stocks or fixed income. We know where they go.
Yes, we know where
folks buy more land, build more houses, they buy more cars.
Yes, also save events like fixed income investment. Some of them also willing to secure their investment, because you don't know after the election, you still need to continue and live your life. So not
some of the political spending, may find its way into Naira bond and treasury bills.
Exactly. Yeah, because you need to also preserve some form of capital beyond the election. Real estate may not be that liquid.
So for those who will benefit from the juicy multi-billion dollar that will be spent on 2019 elections, they should think about investing in stocks, bonds, treasury bills.
Yeah, exactly. Because for when you look at the way the real estate market is in Nigeria, it's not that very liquid, and in terms of even the value placed on assets are not realistic when we want to check and compare to.
When you look out of your office, I'm sure you've seen a lot of to let down there.
Exactly.
Where your office is based. You may be wondering, this is not a good time to put money in these high-rise apartments with no occupancy.
Exactly. And
so if also fixed income at 9%, 10%, 11%, 12% may look like good money to just, I don't want to use the word hide away, but put some of your political takeaways into.
Yes, because when you also look at them in terms of effective yield, true yield of some of these investments, even when you look at currently, even for 364 days, which we expect maybe may close below 13, when you look at the yield, it's still significantly high as 15%. That in terms of effective yield, because they are discounted instruments. So when you compare them to other products, it may still be able to give you as much return that covers covers beyond the return you get from those other products. And for most companies, the tax advantage, they also try to take advantage of that. So by the time you factor that in, that's like 16.7, the north of 17% when you look at the effective yield on some of these fixed income instruments, because they are taxed.
Smart. So I just put some of that now, and I wait until May 27 or May 29, 2019 elections and swearing in, and then I go knock on your door and say, thank you very much. May I have some of this money back?
Exactly.
But are investors right now chasing inflation? Is there this sentiment that this inflation trending lower on a monthly basis, 14 consecutive months, is there faith there for local investors that, look, this is going to keep declining? We believe this,
yes.
whether it is base effect, whatever it is, but we believe that this will keep trending lower, and at some point, the central bank will cut interest rates and might just lock in some money.
Yes, and that's why we've seen significant interest in medium to long-term investment. So you expect that rates will drop, and you see more people trying to invest and lock in or go long on some of the investments, so that they are able to benefit from this higher rate when you are comparing to expected and decline in rates. So we'll continue to see more interest in long-term instruments, especially for OMO, the long end of the OMO tenors, that a lot of investors will also be trying to take advantage of that to lock in their investment and to shield against any decline in rates.
Do you think, let's switch to equities, the other side of the street. Do you think the equities losing streak has come to an end, or it hasn't?
No, really, for the equities market, there will always be time of when you have ups and downs.
Yeah,
and
but this is looking like one day up, one day down. And that looks like a very crazy yield inverse for me, just this way, without really giving me a direction. Where is this equity market looking like? Because I pushed you out there this morning on Twitter, and I was saying I was going to ask you live on television whether we have halt the losing streak on the NSE.
Well, I won't say we're totally alter that, but I would also expect that the results, Q1 2018 results, will also determine the direction that we'll see some of these stocks trade. We expect that from end of this week to next week, because for the unaudited account, you have 30-day window. Most of them will churn in their results, and that would help shape investors' expectation in terms of the direction they should be looking at. But you also look at, for most of these stocks, there's been some form of correction in the past 2 to 3 weeks. When you look at GT, that's traded as high as 55 naira, currently at 42. That's ex-div because of dividend pay. Most of them have been adjusted for dividend. That still presents opportunities, because when you also look at their result in terms of EPS level, you look at in terms of price to book, and compare them in terms of multiples to peers, they're still trading at relatively discount to emerging markets multiples. So that is what, especially for foreign investors, will be looking at in terms of the multiples. They will be looking at that. But results, our scorecards, is very key and would shape direction.
Now we're talking about earnings. We've had quite a few outstanding that hadn't come in. One is not yet in. We have a few other companies. Are investors right now done with full year 2017, albeit a few delayed filings that has been reported? Or are they looking more about first quarter 2018 to be a major determinant of what they do in second and what they will likely do in third quarter?
I think most of the investors would, when you look at some of the stocks that control in terms of market activity, most of them have published their results. And when you look at that, what they'll be looking forward to is the Q1 2018 results in terms of their performance, though it's unaudited, so in terms of reliance may not be as significant as audited accounts. But when it gives like a signal into the new year, what the company will be doing and what it has in terms of its strategy. Management will also be discussing that with analysts for us to understand their outlook for the year.
If we cross back to and juggle this a little bit back to fixed income, we are expecting an NTB today.
Yes, a primary market auction.
Yes. At what rates do you think the regulator, the central bank, will be doing this 91-day, 182-day, and 364-day bills?
I feel starting with the 364 bill, I feel the stop rate may close below 13%. Also, looking at the 182-day bill may close around below 12.5%, while the 91-day bill may close around 11.5, 11% levels.
How soon do you think the NTB will come in at a single digit? Just look at the calendar. We're on April, today's April 18th. Look at it. Between now and June?
No, I doubt for the 90-day, below 90-day, we may be seeing, we're already seeing single-digit rates on the floor for May bills.
For secondary?
Secondary market traded around 8.5, 8% here yesterday, discount rate. And but we expect for the medium to long term, going into the single digits, it becomes very unattractive.
At the primary market?
At the primary market,
yes.
It becomes unattractive for investors. Also, CBN will also be guiding against having excess liquidity and challenging them into areas that may trigger more pressure for the CBN. So on one hand, you also have to guide in terms of the rates must not be totally unattractive. If not, most investors abandon the fixed income market, even though we know governments are not willing to borrow more. They are going more. They're doing more of external borrowings, but they also need to still the balance. They still need, once the budget is passed, you also need to support. You also need to raise capital to fund that deficit.
This less borrowing by the Buhari's administration is the first time that I could remember on Market Street that there's a deliberate policy by the government to borrow less locally.
Yes, I think it's commendable. It's really the first time that you can see that the government is showing that I really don't need your money for now. And they're also trying to restructure, bringing down the cost of borrowing. Because when you look at it, we earn a lot of our earnings is in dollars. So even if they borrow in dollars, they can just do some form of netting and use dollar proceeds, earnings from their from oil, also to service those loans or to pay down on those loans. So, and there will be little crowding out effect on the private sector by collecting money from private sector and using it for expenses. It's really
smart financial engineering. That's what you do, because you have oil inflows steady at 70, 72. So it looks like a good time to quickly cut back on
domestic borrowings
and rely more on the FX, which is when you do the currency translation, it makes your account looks much better rather than borrowing locally.
I think that's commendable, and it should be
maybe that's just what they are doing. But we'll just keep an eye on the government. Next week is the April DMO, April auction. What's the outlook on that? Do you think we've seen this steady decrease also in the figure that the debt office is coming up with on a month-on-month basis? We're heading towards something like 100, 200 billion per auction.
Per auction. Yes. Still, the calendar, the second quarter calendar came out yesterday, and there will be an auction next week. But you also see the DMO have also sustained in terms of the maturities between the 3-year, 5-year, and 10-year. We've not seen in the recent time the 20-year bill instrument or paper that we normally see. And when you look at in terms of the total offer I think in total is less than 100 billion. But that also signals that there will be some form of moderation in terms of the bullish activity we witness within the bond market, because they will also want to keep funds aside to buy fresh issue from the DMO.
Nice conversation with you.
Thank you.
Ayodeji Ebo, this Chief Executive Officer at Afrinvest Securities, one of the licensed investment securities and trading firm by the SEC and also registered by the Nigerian Stock Exchange. We'll take a break, ladies and gentlemen. Let's come back and give you a snippet of some of those stories coming through from the World Bank IMF annual spring meetings are now taking place, entering its third day in Washington, D.C.